Hi guys, this is Young Neil from Advanced Property Strategies, and welcome back to another episode with me and Retire Young Through Property podcast. So yeah, really excited to have one of our guest speakers here with us today, Ollie Hooper from Stax Home Loans. Hey buddy, how you going?
I'm great. How are you going?
Yeah, really good, mate. Really good. And yeah, it's really exciting to be at the cutting edge of the finance marketplace. I know we've spoken numerous times about the changes that are happening. We've got some really good numbers in terms of new listeners coming on board. And I want to welcome everybody who's joined us for the first time. Yeah, there's lots of great information out there. And I'm really excited to have guys like Ollie as part of our preferred professionals to be able to share the message and educate people along the way and help you whatever you need. So, Ollie, do you want to just give us a bit of an introduction about yourself, mate, and what you do as a finance broker? I know some people that they have just had a few experiences with banks and things like that, and as property investors, we need funds from time to time. So, yeah, go for it.
Thanks, Young. Thanks for the intro. My name's Ollie Hooper. My business is called Stax Home Loans. I'm a mortgage broker, and in a nutshell, I work with about 30 different lenders. I'm able to access a bunch of different lenders, and I basically hold people's hands when they're applying for the finance. So if you haven't gone through the process recently, it is a real minefield. And it's my job to basically work with the clients, ask all the hard questions to them up front, shape up their application and present it to the bank in the best possible light to give them the best chance of getting the approval for that finance. So that's it in a nutshell. Fun times.
That's a good thing I like about Ollie is no BS. Let's get into it, cut the crap, and yeah, let's do a deal. So, long story short is, I suppose, a bit of background on a lot of people. I suppose, you know, when I was growing up, I had the good old Dolomite account, and you started off with a bank. You didn't even know why you're with them, but they set up very, very smart, just like they have with my kids. I'm no longer with good old CBA and the Dolomite because they don't really like my risk profile. But, you know, Ollie, you know, talking to a finance broker as opposed to a bank, you know, what advantages do people get by working with someone like yourself?
Well, yeah, it's a really good question, particularly in this environment. And I'd say the biggest advantage you have is, look, you got a professional person on your side. But the key thing is, as working with a broker as opposed to going directly to the bank, you get access to multiple lenders, not only multiple products, but most importantly, multiple policies. So it's an unknown thing by a lot of people. Each bank has different little niches and things they do well and not so well. By working with a broker, you're able to be really nimble and quick, and you're able to present your applications to the lenders that have an appetite for your particular situation. So many times I've seen clients put an application directly to their bank. They've been declined because they don't fit their particular policy niche. With the broker, you have the flexibility to say, well, there's no point going to that bank because they're not going to approve it. Let's go to these one or two over here. And what do you know? You tend to get more loans approved that way. So it gives you that ability to be really nimble and get things done better and faster, as opposed to trying to beat your head against the wall and fit a square peg for a round hole, so to speak.
And that's the thing. A lot of the things that customers like myself who are out there looking at loans for investment properties, for example, that they don't even know what goes on in the background. So I suppose what you're saying, and I've experienced this myself, is you might, you know, apply with one lender and there might be a mark on a credit application, your credit reference, and that might have been declined. And then you go to another bank and another bank, and you're saying there, Ollie, that in this instance, we can save all that angst and essentially go to the shortlist based on the software that you have and the lending criteria that you're able to access and understand. Is that right?
100%. So I like to, with my clients, I like to sort of sit down with them up front, or we talk up front and we flush everything out. So I kind of ask all the questions I know that the banks will be asking them. So before we go anywhere near presenting an application to a bank, we kind of workshop it. So we go through different things and we say, okay, look, these are the pinch points, or these are the things, the issues that you're likely to have. And because of these issues, you know, these three lenders over here are going to be the ones most likely to approve the application. So we kind of do the legwork, we do the donkey work up front. By the time it comes to actually pushing that application through to a lender, we've got a really high chance of getting the loan approved. Or on the flip side, look, if there's something in there that means it can't, the application can't proceed, I'll workshop that with the clients and say, you need to go away and you need to fix these, 2 or 3 things or whatever the case may be. And that may take some time, like some things may be a quick fix. For example, reducing some credit card limits. That's an easy win and a common thing people have to do. Or some things may be, over a longer period of time. So they may need to offload a property or, have some more time to get some income up if they're self-employed. And that process may take, 6 to 18 months. So it's my job to kind of sit down, help the clients understand where they're at now, and then get them sorted out so it's all good, and then we go and push the application through to the bank. One of the things, and I don't know if we'll touch on it later, but it's becoming really prominent is that credit score that you alluded to before. So one of the misperceptions, if you have a lot of applications for credit, it improves your credit file. Well, it's actually the reverse of that. So if you're got a very busy credit report, so you're making a lot of applications, it tends to decrease your credit score, and the lenders have a much greater visibility of your credit scores these days than what they did, say, 18 months ago with the advent of comprehensive credit reporting. So look, that's, I suppose, a window into what I do and how I try and tackle it for each client.
Yeah, I understand completely. So one of the things I was thinking about is, as preferred professionals and people that I work with and associate with, they need to be good problem solvers. So do you want to just share with the clients some of the more adventurous or more difficult problems that you've been able to solve in the last 3 to 6 months with clients to be able to get them finance where they had problems getting finance elsewhere? Because I suppose that's really where you add value, and you add value to yourself, add value to the clients. They're able to buy the property or refinance or get access to funds. So what are some of the problems, more difficult ones that are more noteworthy of sharing with these clients that you've been able to help your clients with and overcome?
Yeah, so look, I'd say particularly for the students that work with you, I deal with a lot of obviously property investors, but they tend to have quite complicated structures and setups. And by that I mean they may have multiple different entities that they're either operating a business out of, or the way in which they're buying the properties. And that in itself, it takes a lot of time to pick through and understand how the entities work, how the incomes flow. And there's certain lenders out there that deal with those complex structures better than other ones. So I suppose, particularly dealing with your students, I've had a lot of success in being able to untangle the web of the entities and the income flows, present quite complex applications to the lenders, and then have them approved. And like you said before, the clients probably don't understand how complicated the web of stuff is, but you've had a really good hit rate in getting those complex applications through, which has been good. So that's probably the biggie.
Yeah. And I completely understand, because I stand up there, sprout some ideas, and then they come to you with these new whiz-bang ideas, and then you actually got to make it happen. So I know that your job's not easy, mate, because some of the stuff I teach and do, everyone's circumstances are different, right? I might talk about a joint venture, no money down, do it this way, you got no cash, you got serviceability, or vice versa. And so what about some of the mistakes that people do in terms of either applying for finance, or what some of the things that people can do to shore themselves up to prepare for the next purchase to make it easier for them?
Yeah, look, I'll touch on probably some of the common ones that I see all the time. One example is credit card limits. So over time, it's probably happening less now, but certainly in the past, you get that letter in the post from a bank, you've had a credit card with them with maybe, say, a $2,000 limit, and they send you the letter out in the post and they say, congratulations, you've now been approved for $10,000, we're going to increase your credit card limit. And then that can happen over multiple cards. And one of the common misconceptions out there is people will say, I've got this credit card, but I pay it off in full every month, or I don't never have an outstanding balance on it, but yes, a $10,000 limit on it. When it comes time for the finance application, the bank's not so, well, they are concerned that it's paid on time, but the thing they're primarily looking at is the limits of the cards, because they basically look at it and say, well, we could approve this loan tomorrow, and you could go and run that card up to the limit, and you'd have a commitment with the card. So quite often, high credit card limits is a thing that can really restrict people's borrowing capacity. And it's a really easy win as well. So, if you're not using the high limits, go out there and get them reduced. Generally, it's a phone call or a quick email to your credit card provider. Say, can I drop my limit down 10,000 to 2,000 or whatever the case may be? And all of a sudden, that small move may translate into, $100,000 worth of additional borrowing capacity.
Absolutely. Excuse me.
Just by making that minor change. So that's a classic case on there.
No, very good, mate. And what about charge cards? I know it's sometimes easier to go to Myer or get GE furniture package. How do they affect applications and things like that?
Yeah, well, those store cards, those Go cards, Go MasterCard, things that you get in Harvey Norman and things, they're a really common source of what the banks call undisclosed debts. So the situation may be someone's gone and bought a TV or a furniture package, they've taken out one of those interest-free credit cards, they've kind of paid it off, and then they just forget about it, right? The card sort of sits in the bottom drawer, comes together, we put the finance application together, and the clients forget to declare that card because it's kind of been done and gone. But the fact is the card remains open, and the banks can actually see that on the credit file report. So if you go and put the application into the bank, there's an open credit card there, but it hasn't been declared on the application, that's going to raise a red flag for what the lenders call an undisclosed liability. So it's really important that you understand what accounts you have open and make sure they're all translated to the application. And if you're not using them, just get them shut down, close them down and get rid of them, because they're generally not going to help you when it comes to the finance application.
Yeah. And I think one of the things that's important, and I did this post GFC, was basically structure myself for long-term abilities to borrow. So is that one of the things you definitely take into account? Is obviously if they've got a property that they want to buy, they've signed a contract on it, as well as future borrowings. So is that one of the things that you take into account, both the short-term and the long-term there, Ollie, when you're assessing people's finances?
100%. So quite often we'll go, okay, look, this is the transaction that's in front of us today, but once you're through that transaction, what does the picture look like after that? And I'll actually, we can sort of sit down and workshop things. So we might pull up a servicing calculator and say, okay, this is the scenario today. If you change these components here, you sell that property, eliminate that debt, this is going to be your picture down the track. So we can kind of forecast ahead, and it can even be, a couple of years down the track. Yeah. And then my clients know, okay, these decisions I'm making now from today going forward are going to impact my position in 12, 18, 24 months time. So having that, I suppose, holistic or view on things is really important when it comes to this, because those little decisions, store cards, getting a car with a chattel mortgage, these things can impact borrowing capacity. And then the other big one I haven't mentioned is around the living expenses. So that's a real button, has been probably for the last 2 years with the lenders. So just getting a handle on your living expenses, because it's now mandatory to provide a breakdown of that. So they're all little things. They all help in the big picture.
Yeah, and that's one of the things I realised, post GFC, that it was funny. I think one of the previous interviews that we've done, I was talking about how I had, I think, like 10 or 12 credit cards at one stage with the GFC times, when we're talking about low doc loans, where people could get financed left, right and centre just by signing it off with an ABN, right? And I was definitely one of those people who you could use credit cards for deposits and holding costs and things like that. It was pretty scary when I look back at it, what I used to do just to keep myself afloat, especially post GFC, when there wasn't a lot of cash coming in, and you're waiting for projects to finish, and you're just living on debt. So you name a card, I had it at that point in time, and then cutting them all up and realize, what, post GFC is all been about liquidity and not just cash, but being able to borrow as well. So sometimes it does mean, rather than buying a $50,000 car on debt, you might buy a car, pay cash, and pay $25,000 and be able to do another deal, and it's all about priorities, isn't it, Ollie?
On. Yeah. And it's it's about explaining and helping people understand that, how those little decisions can impact the bigger picture. Because at the end of the day, you want to be doing the property deals, right? You want to be positioning yourself in the best possible light to be able to borrow and to be able to move through deals over time. And if you can dial it right back to those basic things, and get your house of cards in order, it's definitely going to position you far better for borrowing time when it comes to the banks.
Absolutely. So it's a couple of things. One is obviously income, increasing your income as much as possible. On the other hand, reducing your expenses, and part of reducing your expenses might be reducing your debts, whether it's personal debts, car debts, car loans, personal loans, credit cards and things like that. So in wrapping up, Ollie, how can people get in touch with you and find out more about what your services are, and how can they get in touch with you to be able to have a chat to you about their structures and what's possible for them?
Yep. So my website is Stax Home Loans, STAX for X-ray, staxhomeloans.com.au, and my contact details are on there. If you've got a pen and paper handy, that my direct mobile number's 0401 032 868, or just shoot me an email, which is Ollie, OLLIE, at staxhomeloans.com.au. And generally the process is once someone gets in touch, we have a little bit of chat about their situation, what they're looking to do. I'll send a link out, capture some sort of information to start off with, so we can get a quick picture of what the borrowing capacity, incomes and expenses and things like that are. And then generally I'll come back with quite a detailed presentation and say, okay, look, this is where we're at. Does it fit? Does it not? We workshop it, and then, if everything's in order, we'll go to an application from there. So that's the general process, and love to hear from anyone who needs help or needs a chat.
Yeah, and I think I think the biggest thing that Ollie, as a consultant, external consultant, can help anybody is having a look at your portfolio and say, you know what, I can save 0.5% here, 0.25% there. And you know what, it all adds up. The thing about interest rates, especially if you've got a mortgage on your own occupied place, which is generally not tax deductible, it's compounding the benefits that you get. So whether you're looking at buying in the future, doing a development, refinancing your property, it's worth at least a 10, 15 minute conversation just to see how Ollie can help. So thanks again, buddy. And thanks for your time. And we'll catch you next time, hey?
You're welcome. Thanks, Young. Talk to you later.
Thanks, guys. So that was Ollie Hooper from Stax Home Loans. And this is Young Nguyen signing off for Advanced Property Strategies podcast. So thanks, guys, once again, and we'll catch you next time.